Hey, what's up everybody? It's your mortgage expert, Brian McCauley. So 2023 is upon us and buyers and sellers are wondering, when is my time to shine? Stick around. In this video, I'm going to predict the future. So here we are in 2023, and we are in the thick of the housing market in Dallas, Texas, where things have continued to cool off, but they started to pick back up just a little bit. And why is that? Well, I think people are starting to see interest rates come back down just a tad. So why does that matter? Well, interest rates follow inflation. So as inflation goes up, interest rates go up with it. As inflation goes down, interest rates drop. So inflation hasn't been as bad lately. Interest rates start to drop, and obviously it gives buyers incentives to go out and get cheaper money and start buying properties in the city. You know, the other component about this is there is a lot more inventory available. Buyers have a lot more selection, but you know, the market still understands that as interest rates continue to drop, it's going to push up buyer demand, and it's going to make buyers come off the sidelines a lot quicker, which means less and less inventory will become available. And before you know it, we'll be right back into another bidding war. So if you're a buyer out there, if you're a seller out there and you're thinking, hey, it's January 2023, Brian, how much time do I have to make a move and actually get a good deal? So my prediction, bold prediction for 2023 and beyond, stick around to the end of this video for 2024. I think it's going to go like this. I think Q1 of 2023 is probably going to be one of the worst quarters economically. I think you'll see things get a little bit worse. I think that's what has to happen in order for inflation and for the government to get their hands around it and be able to control it. Hopefully it doesn't take them longer than a quarter. We don't want anything moving in the wrong direction even further, but I think this is what you're going to see. So as inflation comes down, interest rates will as well, giving buyers opportunities to go out and capture and negotiate deals on properties. All of a sudden, there are 2 and 3 properties that clients like. They've been sitting on the market for 2 or 3 weeks. These sellers understand we're not at the peak of the market anymore. And so buyers, now is your time. Now is your time to get the opportunity. I've been having this conversation with our clients on every single mortgage planning session and strategy call for the last 4 or 5 months, explaining this window is good for buyers. Yes, interest rates aren't great. Today, they're somewhere probably around at 6.5 or so, maybe even a little bit less since the market's dropped. The rate isn't perfect. The payment isn't ideal. But what you do is you find a house that you actually like. There's already a discount on the price. You can probably even get a concession on top of that, depending upon your strategy with your realtor to get closing costs and buy the interest rate down. It just really is the time to buy, because if you wait until interest rate drop back down to 4.99, what's going to happen is everyone, including yourself, is going to come off the sidelines at the same time. There's going to be a frenzy. It's going to eat up all the inventory, and all of a sudden no inventory is left. Therefore, demand goes up, and obviously the prices go back up as well. So you might get a little better deal on the rate, but you may not even get a house. Or if you get a house, it's going to be higher priced, and you may even have to go back to the old school days of where you have to do an appraisal waiver clause. And a friendly reminder, what that means is, for an example, if you got a $500,000 house, but you got to offer $525,000, you have to waive the appraisal clause, which means, hey, if that house comes in $500,000 or higher, you are on the hook for cash out of pocket. That will happen again. It's just a matter of time. So from a buyer standpoint out there, I really think the first quarter of 2023 is kind of the last big opportunity for you to get a deal on a property. Not to say that you can't in Q2, but again, what you want to do is you want to watch inflation. As inflation goes down, interest rates will drop as well, which will make it a little tougher to get properties, make it a little more expensive on the value piece. And then what's going to do is transition over to a seller's market. So those sellers out there that are watching, I think things are going to get a little bit tougher, and there's going to be opportunities to maximize your equity and get a better deal on the house, probably starting in Q2 of 2023, but that's just a timing thing. You as well are waiting on inflation to drop, and obviously you're waiting on interest rates to drop, pushing buyer demand up, which ultimately will push your price back up, and obviously you'll get multiple offers and higher prices on the potential offers from the buyer. So that's where I think things are headed for right now. I want to transition into something that I talk about and I've discussed with a lot of clients before, called the cost of waiting. A lot of times clients and buyers are waiting on interest rates to drop, but you have to look at the total cost of the transaction. You have to look at the quality of the property, but the third most important thing is you have to look at your return on your investment. So here's an easy example. Let's just say you've got a $500,000 house and you say, hey, Brian, interest rates are at 6.5. I just don't like where the payments are at right now. You know, I can't get the sellers to help me out with any closing costs. I'm going to wait till interest rates drop. Okay, so here's the thought on that. Let's say that $500,000 house, you wait on it. Yes, the monthly payment is probably going to come down $100 to $150, but interest rates drop and buyers come off the sideline, the price of that property is going to get pushed up quickly. So it may go from 500 to 510, 510 to 520, and before you know it, by summertime, that property is maybe up to 525 or 530 again. So what happens is you saved 1% on the interest rate and $150 in the payment, but now you just cost yourself $20,000 or $30,000 extra on the property of the house. Sometimes that extra money can't be financed into the property and you have to sign an appraisal waiver clause, so that will cost you an extra $25,000 or $30,000 out of pocket. Now, the third component of that I want to talk about, just outside of the rate and the payment and outside the cost of the house, is if you buy the house now at $500,000 and take a 6.5% interest rate, two things will happen for you as a buyer in the future when this buyer demand goes back up. Number one, you can just refinance that interest rate from 6.5% or whatever it is back down to where market is at 4.5%. The other component to remember is that $500,000 house in 6 months from now is going to be going for $530,000 or $540,000. So what I want you as the buyer to do is capture the property at the market right now at $500,000. When the market pushes back up and all these buyers come off the sidelines because interest rates drop, and then it pushes the price of property up, I now want your $500,000 house to be worth $530,000 because of the comparables and the sales in the area. I don't want you having to get a little bit less of an interest rate, but paying for that property on the swing up and having to pay an extra $30,000 for it. I'd rather you make that money. So that's one of the biggest components when it comes to the cost of waiting. I want people to understand the totality of the cost, the rate and the payment, where you get the property at now, or where the upswing is going to be and what it's going to cost you later if you wait versus buying now. You'll make that equity and actually make money when the market turns. You know, something else to consider in 2023 are the loan amounts. The conforming conventional loan amounts have gone up to $726,000, and the FHA loan amounts have gone up to $472,000. So why does that matter? Well, it gives more consumers buying power every year when the loan amounts go up. So if conventional has raised their loan limits to $726,000, you can get a $750,000 house with 3 to 5% down. Where last year, obviously, the limit was $647,000, so they've increased it almost $100,000, which gives a lot more of the people buying power. That is not favorable to the buyers when the market turns back in the seller's favor. So that's another big component of the cost of waiting, where maybe somebody last year who could only get a $647,000 conventional amount and they were looking at a $775,000 or $750,000 house, they didn't have the 10 or 15% to put down to get to the conforming loan limits. Now those people with the new limits are now eligible and can buy that same property for 3 to 5% down. So it brings actually more people back into the game. So the two things that are going to bring people back into the game, as we've talked about, is lower interest rates that will push buyers off the sideline, cheaper money, more affordability, but obviously that'll push up demand as well, and then new increased loan amounts. Now people can get the same 3 to 5% down, but with an extra $100,000 or $75,000 added to the loan amounts, they're not restricting themselves on how much property they can actually buy. They can go above and beyond where they could last year. So not only will they have the opportunity to get a better rate than they did in 2022, they can actually get more buying power as well, which doubles the strength that the buyer now has to acquire more property. And therefore it puts more buyers into the same pool, which means you have more buyers, less homes, more demand, and prices will continue to push up through 2023. So knowing what we know about 2023, I'm just going to have some fun and I'm going to tell you my personal projection and opinion only for 2024. So this is how I think things go, but I think as a buyer and a seller out there, you must pay attention to this because the future matters, and the future matters on how we make our decisions, not today's investment, tomorrow's return, not today's price, tomorrow's projection, and also where things are going in 2024. So Q1 2023 is the worst quarter economically for now because of inflation, unemployment, and I think that's what it will take to get things down. I think they'll get inflation under control. Q2, towards the middle summer of 2023, they will claim victory over inflation. We all understand how politics works, and there's a 2024 presidential race ahead of us. If they were running in 2023, based on what happened in 2022, they wouldn't stand a great chance, and they don't want that, so they're going to try to change the narrative. I think this is what's going to happen. I believe the current institution and the current government is going to want to stimulate the economy because obviously they're going to want to boost it and they're going to want to make it look good and they're going to want to create some revenue going into 2024. So most of the time when they stimulate the economy, they cut interest rates. That's going to be a great thing for our industry and a great thing for you as a buyer from a payment standpoint, but it won't be so good from a demand standpoint. This is the narrative and the ticket that they're going to run on, which is, hey, look at us, our policies worked, we got our hands around inflation, and then if they talk to the Fed and they get the Fed to bring rates back down, at least 50% lower than what they are now, bringing all these auto rates and mortgage rates and everything back down to the 3s and the 4s, this will temporarily stimulate the economy. You'll have a ton of people buying cars, refinancing cars, buying houses, refinancing houses. It'll give the appearance like things are good, people are spending money again, people are making money again. This will create a lot of go back to work employment optics, and it'll look good heading into 2024. So there will be a solid ticket to run off the fact that the economy is trending in the right direction. Whether or not that will sustain all the way through 2024 or 2025, I don't actually know. But if you're a buyer out there right now and you're considering buying a house, you don't love the interest rates, I've mentioned this before, it's still a great time to buy a house. There's a lot of concessions and negotiations to be made with the seller. Stick with your realtor partner, they're the expert. Let them discuss with you some strategies on how to get the best deal. If you can get a deal on a house, do not take the concession off the price of the house. Take that concession, put it in closing costs, pay for your closing costs as much as you can. That's true cash on cash that stays in your pocket, and use the remaining amount of money to buy the interest rate down. Because when things change, not if they change, when things change, it starts to transition back to where interest rates drop. You will start to see inventory get taken quickly. You will start to see demand get pushed back up. Not only will it be harder to get a house, it'll be harder to make an offer and negotiate in your favor, because there's going to be 3, 4, 5, even 10 buyers on the same property by Q2 or 3 of next year. And then in my bold prediction, my Nostradamus prediction, if they get their hands around inflation and then they want to stimulate the economy to give the appearance that it's rocking and rolling, they're going to cut interest rates. And if they cut interest rates even more than the natural digression coming down off inflation, you're really going to see some serious movement. The takeaway here as a buyer is you probably want to buy now through the end of Q1. The properties are going to be there, the deals are going to be had, but after that, I think it's going to start to turn back to the seller's favor. So hopefully you found this video helpful. If you did, do me a favor, like, subscribe, share with somebody you know that could benefit from it as well. Drop a comment below. Myself or the team will promise to get back to you. Or if you just want to have a quick call or schedule a consultation with me about your current financial position, thoughts on your housing, and the best way to go about buying a house, call us, email us, text us. We're always here to help. Until next time, stay tuned.